Welcome to the Coin Bureau Weekly News Roundup. My name is Jessica.
And my name is Guy. Here are the top stories in crypto this week.
Trump's crypto bet. US presidential candidate Donald Trump doubles down on crypto ahead of his historic speech at the Bitcoin conference in Nashville, while incumbent Joe Biden announces he won't seek a second term. Everything you need to know.
Whales buy BTC. Spot Bitcoin ETFs accumulate billions in BTC as Mt. Gox creditors continue to hodl instead of selling. When could BTC hit a new all-time high?
Ready, set, ETF. Exchanges confirm that the spot Ethereum ETFs will list on Tuesday, while investors speculate about their flows. How high or low could ETH go?
Rate cuts coming. Fed officials signal that interest rates will be brought down, causing small-cap stocks and altcoins to go up. Why rate cuts could cause crypto to decouple from stocks.
And a closer look at last week's top-performing cryptos and where they could be headed next.
All this and more in just a moment. Crypto staged a recovery rally last week, and it's possible that the catalyst that kicked it all off was the failed assassination attempt on Donald Trump. This sounds crazy until you realize that Trump surviving the attempt on his life has reportedly increased his chances of becoming president, at least according to the polls. When you remember that Trump has been positioning himself as a pro-crypto presidential candidate, then an increase in the chances of him winning is therefore bullish for crypto, for better or for worse. The fact that Trump's VP pick, J.D. Vance, isn't a fan of the SEC or Gary Gensler and holds BTC is really the cherry on top. The craziest part of it all is just how much the crypto industry has been throwing its weight behind Trump. Co-founders of VC firm A16Z have signaled their support, while there's no shortage of other industry figures vocally getting behind him. Not surprisingly, Trump seems to be returning the favour. Despite almost dying last weekend, Trump has confirmed that he will be speaking at the Bitcoin conference in Nashville later this week. For those unaware, a presidential candidate has never spoken at a crypto conference before, so this is a pretty big deal. More importantly, this could be the catalyst that puts crypto back in the spotlight for retail investors in the US. Take a second to consider that over 74 million people voted for Trump in 2020. This means that there could be millions, possibly tens of millions of people paying attention to his appearance at the Bitcoin conference. This will put BTC in the spotlight and could reignite retail interest in crypto. And yes, we know this is a Bitcoin conference, not a crypto conference. And we also know that Donald Trump isn't a Bitcoin maxi. That's because he launched his previous NFT collections on Ethereum, and ETH happens to be one of his largest crypto holdings, at least as of June. It's safe to assume then that his next NFT collection will also be launched on Ethereum. Meanwhile, most Trump-related meme coins seem to be on Solana. Whereas Trump's NFT antics are likely to result in an increase in demand for ETH and usage of Ethereum, his antics more generally are likely to result in an increase in demand for Sol and the usage of Solana. The caveat in this case is that Trump is reportedly considering announcing that he will consider adding BTC as a reserve asset for the US government. This would be truly crazy and could very well be the catalyst that takes BTC to new all-time highs. It could also leave ETH, Sol, and other altcoins in the dust. Whatever the case, there's no question that what Trump does and says in Nashville will move the crypto markets, and that these moves are likely to be to the upside. How much this will benefit BTC versus altcoins remains to be seen, but one thing is for sure, millions of people will be watching, and many will likely buy. Now, when it comes to Joe Biden's decision to drop out of the presidential race, the impact on crypto is harder to assess. BTC has pumped to around 68k in the wake of yesterday's announcement, but a lot now depends on who becomes the Democratic nominee in his place. Biden is backing his VP Kamala Harris, whose views on crypto, if indeed she has any, are unknown. she does have ties to big tech, which could be interpreted as a positive for crypto, or she could aim to continue the Biden administration's war on the industry. And it's not even certain that she will be the one to run against Trump in November. We will have to watch and wait on this one, though one thing is for sure. This presidential race just got a whole lot more interesting. But back to BTC, which continued its recovery rally last week as the fallout from the attempt on Trump's life continued. Now, this second leg higher seems to have been due to a combination of spot Bitcoin ETF inflows and short traders being squeezed. That's because there were over $1 billion of inflows into the ETFs and over $200 million of short liquidations. The result was a sudden rally to 67K, which happens to be where the Bollinger Band moving average is on the weekly. For context, the weekly Bollinger Band moving average has been a significant zone of support and resistance. Being above it means BTC is in a bull phase, and if BTC is below it, bear phase. The fact that BTC is hitting the Bollinger Band moving average on the weekly is therefore a big deal. If BTC can break back above this key level, it could quickly rally to new all-time highs, specifically to around 77K. Conversely, if it gets rejected, BTC could quickly fall to recent lows, specifically to around 57K. We will likely find out which way BTC will break in the next week. In the absence of BTC sales from Mt. Gox creditors, the bullish scenario seems more likely. This is simply because Mt. Gox creditors selling BTC seems to be the only bearish catalyst, and it looks like said creditors aren't too keen on selling. On the flip side, there's no shortage of bullish catalysts that could take BTC higher this week. If you're subscribed to our weekly newsletter, you'll already know what these are. If you aren't, then be sure to subscribe to our newsletter to get our weekly market forecast using the link in the description. Now, the caveat is that the macro backdrop is looking a bit bearish. For example, major stock indices such as the S&P 500 and the Nasdaq have experienced large pullbacks and could continue falling. If this happens, then it could dampen the rally in BTC and crypto more broadly, or even cause a correction. From our perspective, these pullbacks appear to be due to political and geopolitical uncertainty. Politically, there's Joe Biden announcing his decision not to run for a second term, and all the speculation around who will run in his place and their views on crypto. By the way, we recently did a video on this very topic, which you can find in the description below. And what would a second Trump presidency mean for the markets? Meanwhile, geopolitically, there's growing instability in the Middle East and Ukraine, which isn't really anything new. So far, this bearish macro backdrop hasn't really affected crypto very much, but this could change if we see something like, say, accusations that crypto is being used to fund certain militant groups. Some of you may recall that this is exactly what happened last autumn, and it contributed to the correction back then. Thankfully, though, crypto factors continue to be in the driver's seat, and that means the next 7 days could bring more up only. If you want to maximize your gains, regardless of which way the markets go, then be sure to check out the deals offered exclusively by the Coin Bureau. Trading fee discounts of 70% and sign-up bonuses of $100,000 will help your portfolio grow. But these deals won't be around for long, so be sure to take advantage of them using the link down below. Now, speaking of bullish catalysts, the launch of the spot Ethereum ETFs tomorrow is going to be very bullish, not just for ETH, but crypto more broadly. That's just because it will open the door to additional spot crypto ETFs in the future, with Solana likely being the next altcoin in line. More about that in the description. Moving on. So, this begs the question of how high ETH could go when the spot Ethereum ETFs launch. Well, the answer ultimately depends on the net flows into the ETFs, as well as the speculation around their launch. The charts suggest that speculation around the listing alone could be enough to take ETH as high as 3.9K. After that, the net flows will be front and center. The charts suggest that ETH could rally as high as 4.9K if there are large net inflows. Conversely, if there are large net outflows, then ETH could fall as low as 2.9K. Again, Given the bullish crypto catalysts in play, it seems that the upside scenario is more likely. For reference, a rally up to 4.9k would translate to a percentage gain of around 40% for ETH. And we'll be doing a complete Ethereum ETF video tomorrow, so make sure you're subscribed and have your notifications on to get that when it drops. Now, as impressive as a 40% gain for ETH sounds, it's nothing when you realize that Ethereum-adjacent cryptos, such as Layer 2s, could see even larger gains. In turn, the meme coins on these Layer 2s could see even larger gains still than the Layer 2 tokens themselves. Of course, this assumes that retail investors will return to the crypto market in number. As you may have heard, retail investor interest in crypto is the lowest it's been in years, with recent data from CryptoQuant suggesting that retail-related BTC transactions are the lowest they've been since 2021. This is extremely important, as it means that most of the money sloshing around the crypto market is mercenary capital and experienced retail investors from previous cycles. In turn, this means that we may not see the same degree of investor rotation that we had in previous crypto cycles, or at least not yet. The only exception is the spot ETFs, and this is where things will get interesting. It is possible that spot Bitcoin ETF investors will begin rotating their gains into the spot Ethereum ETFs when they launch. This would not only increase ETH's price, but also increase its dominance relative to BTC in the market. As a fun fact, ETH's price is directly correlated to leverage in DeFi, as ETH is the main form of collateral used to borrow stablecoins to buy more crypto. Similarly, an increase in the ETH-BTC pair is essentially a proxy for not just ETH strength, but also altcoin strength. ETH-BTC rising means that alt season is coming. With a bit of luck, this would be enough to encourage more rotation into altcoins, something which has been noticeably absent from this crypto market cycle so far. Believe it or not, but this could start changing as soon as this week, and that's for two reasons: Donald Trump and interest rates. Now, this ties into another tailwind that could take crypto higher this week, and that's additional signaling from the Federal Reserve that interest rates will soon be coming down. FYI, lowering interest rates will make it easier to borrow and make debts less expensive, stimulating the economy and the markets. The reason why the Fed increased interest rates to begin with was to fight inflation. That's because increasing interest rates makes it harder to borrow and makes debts more expensive, causing the economy and the markets to slow down. Obviously, the markets haven't slowed down that much. This has been due to a combination of fiscal policy, aka government spending, and investors constantly expecting the Fed to lower interest rates. In recent weeks, government spending and investor expectations of rate cuts have gone into overdrive, which has driven the stock markets to all-time highs. More recently, the prospect of Fed cuts has resulted in some rotation from large-cap stocks into small-cap stocks, which could be a contributing factor to the aforementioned pullback they've been experiencing. If this rotation continues, then small caps could finally start outperforming large caps. And because small caps seem to be correlated to altcoins, altcoins could therefore benefit by proxy. There's just one problem, however, and that's that Fed cuts have historically been correlated with market crashes. This is because, historically, the Fed would only start cutting when the economy or the markets imploded. Naturally, this has led to speculation that recent comments by Fed officials signaling lower interest rates are something that's paradoxically bearish for the markets, which could also be a contributor to the aforementioned pullback in stocks. The catch is that crypto is the best at pricing things in. In other words, it's possible that Fed cuts could be bearish for stocks but bullish for crypto, because crypto investors know that money printing is coming. It would be analogous to what happened during the banking crisis last spring. Stocks crashed, but crypto actually rallied, especially BTC. Now, this would be a game changer, as it would effectively cause crypto to decouple from stocks completely. To bring you up to speed, the prospect of a decoupling is something that crypto investors have been talking about for years, but it's something that hasn't really happened yet. Anyway, besides Fed cuts, the catalyst that causes crypto to decouple from stocks could actually be a Trump presidency. That's because a Trump victory in November would create certainty for crypto due to the likelihood of pro-crypto regulations being passed. But it could cause uncertainty for stocks due to changes in domestic policy and geopolitics. Realistically, though, a Trump victory would probably be bullish for all assets. Besides Trump's pro-growth policies, it's believed that he wants a weaker US dollar, as it's more stimulative for the economy and the markets. Crypto just so happens to be inversely correlated with the US dollar. DXY down, crypto up. Now, we'll be taking a closer look at what a Trump presidency could mean for the crypto market later this week, so be sure to keep your eyes peeled. And with all that said, it's about time we looked at last week's top-performing cryptos. So, Jessica, take it away.
Thank you, Guy. Well, last week's top-performing cryptos were Dog with Hat, WorldCoin, Helium, Floki, and Pepe. Starting with Dog with Hat. With appears to have pumped in response to Sol's rally, which seems to have been driven by confirmation that the spot Ethereum ETFs would soon be listing. You'll recall that Solana seems to be next in line for spot ETFs of its own. WIF is struggling to get above a key resistance level of around $2.5. If it breaks above, WIF could rally to $3.5. If it gets rejected, WIF could fall to $1.5. Recall that there seems to be a lot more bullish crypto catalysts these days, but also remember the bearish macro backdrop. Next up, we have WorldCoin. WLD appears to have pumped in response to the news that the controversial project has delayed the unlock of 80% of its tokens by 2 years. The practical effect of this is that there will be less sell pressure and apparently also more skepticism around WorldCoin itself. Like WIF, WLD is struggling to get above a key resistance level of around $2.5. The difference is that WLD could rally to $4 if it breaks above it, and could fall as low as $1.5 if it gets rejected. Some would say that it would be best for WLD to get rejected, but let's not go there. There is more about WorldCoin in the description. When it comes to Helium, HNT appears to have pumped in response to a progress update published by Helium Mobile, which is the joint venture between Helium and T-Mobile, which leverages Helium's hotspots for mobile connectivity. It also appears that Helium Mobile has hit over 100,000 registered users. As you might have guessed, HNT is struggling to get above a key resistance level of around $4.5. If it breaks above, it could rally as high as $6. If it gets rejected, it could fall as low as $4.5. As for Floki, it appears to have pumped in response to the project's ongoing transition from a meme coin to a play-to-earn crypto. Fascinating stuff. Now, lo and behold, Floki is still struggling to get above a key resistance level of around 0.0002, which I refer to as 2 for simplicity while speaking to you all about it. Anyway, if it breaks above, it could rally as high as 2.5, and if it gets rejected, it could fall as low as 1.5. That's a potential gain of over 40% versus a potential loss of around 25%. Just FYI. Finally, we have Pepe, which appears to have pumped in response to various promotions on different crypto exchanges, including Binance and Crypto.com. Pepe is struggling to get above a key resistance level of around 0.000012, again, which I refer to as 12 just for reference. If it breaks above, it could rally as high as 15, and if it gets rejected, it could fall as low as 9. That's a potential gain of over 20% versus a potential loss of 25%. Just FYI. And keep in mind that these are all short-term targets. And if you want to keep track of cryptos which are pumping but also where you can trade them, then be sure to join the Coin Bureau Insider Telegram channel using the link down in the description.
And that's all for today's Coin Bureau Weekly Crypto Review.
If you enjoyed it, then you know what to do. Hit that like button, subscribe button, and bell icon too.
Don't forget to check out our deals page where we have massive trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on some of the best exchanges, only for the viewers of this channel.
Also, if you do want to pick up some snazzy crypto merch, the Coin Bureau merch store has you covered.
You can find the link to that resource and many others in the description below.
Thank you so much for watching, and we'll see you all in next week's episode.